Picture this. It's your first week at your new job. You're a fresh accounting graduate. You passed your exams, you know the theory, you show up on day one ready to go. And your manager walks over, drops a file on your desk, and says, "Can you prepare the CF for this month? I need it by 4 o'clock.
The CF?
The cash flow statement. And here's the thing. You know what a cash flow statement is. You studied it. You passed the exam on it. But now you're sitting at your desk, staring at the trial balance, and you genuinely don't know where to start. Not because you're bad at accounting, because there's a huge gap between understanding something in theory and actually doing it under real pressure.
I remember that exact feeling. My first month at work, my senior asked me to reconcile the accounts payable ledger. I knew what reconciliation meant. I just couldn't figure out which report to pull first, and I was too embarrassed to ask.
And that moment of not knowing who to ask or what to ask, that's actually the thing we're going to fix today. Because the real question isn't how smart you are when you graduate. The question is, what specific skills do you need to build in your first 3 years to get from fresh graduate to general accountant? And how do you build them without spending 5 years figuring it out by accident?
Nobody gave me a roadmap when I started. I just learned as I went, which took a lot longer than it needed to.
By the end of today's episode, I'm going to give you that roadmap. 5 specific skill pillars. And here's something I want to plant early. There's one question that every manager will ask you in your first performance review. It's not about Excel. It's not about which accounting software you know. It's something more fundamental than either of those. We'll get to exactly what that question is and how to answer it in English by the end of today.
Okay, now I'm actually curious. What's the question?
We'll get there. But first, let's build the foundation, because you can't answer that question well without the skills behind it. Let's start with pillar 1. The first pillar, and this is non-negotiable, is knowing your core accounting operations. Not knowing them in theory, being able to do them without looking things up every 5 minutes. We're talking about how costs are calculated, how you build a financial statement from scratch, and especially the cash flow statement.
Why especially the cash flow statement?
Because it's the one that most fresh graduates are genuinely afraid of. The income statement makes sense. Revenue minus expenses, you get your profit. The balance sheet makes sense. Assets equal liabilities plus equity. But the cash flow statement, it has 3 sections: operating, investing, and financing. And the one that trips people up most is the operating section, specifically when it's prepared using the indirect method. People freeze.
I still remember struggling with that in my second month. My manager asked me why operating cash was lower than net profit, and I had absolutely no idea how to explain it.
Right. So let me explain the indirect method in plain English, because this is something that trips people up in real work, not just in exams. The indirect method doesn't start with cash. It starts with your net profit, the bottom line from your income statement. And then you work backwards. You add back items that reduced your profit but didn't actually take cash out of the business. The main one is depreciation.
Because depreciation is a non-cash expense. The asset gets older on paper, but no money leaves your bank account.
Exactly. And then you adjust for changes in working capital. Accounts receivable, inventory, payables. If your receivables went up this month, that means customers owe you more money, which means you earned revenue but didn't collect the cash. So in the cash flow, that's an outflow adjustment.
It's like the income statement tells you what you earned, but the cash flow statement tells you where the money actually went, or didn't go.
That's it. And once you can explain that clearly, to your CFO, to your Singapore manager, to a client on a video call, you've crossed a line that most junior accountants haven't crossed. We'll actually practice that explanation a bit later in a real scenario.
So once the accounting operations are solid, what's the second pillar?
Software. And before we move on, Let's stop here for a second, because this is where I see a lot of fresh graduates spend energy in completely the wrong direction.
What do you mean?
They want to know every feature in MISA or FAST or Xero before they understand what the software is actually doing. They spend weeks watching tutorials, and then they start the job and realize the accounting logic is what they actually needed.
I did exactly that. 2 weeks of fast accounting tutorials before I started my first job. And then I got there and realized the system was customized in a way that nothing matched the videos.
And the thing is, accounting software is a tool. If you understand debits and credits, if you understand how costs flow through a system, you can learn any software in a few weeks. The software is not the skill. The accounting judgment behind it is the skill.
That's a really useful reframe. What about Excel? Because people always debate how advanced you need to be.
For a general accountant role at the 3-year mark, you don't need to be an Excel expert. Pivot tables, SUMIF, VLOOKUP. If you have those 3 functions solid, you can handle most monthly reporting tasks comfortably. The more you move into financial analysis or budgeting later, the more you'll want to expand. But in your first 3 years, those 3 are enough.
Pivot tables changed my life when I finally learned them properly. I used to manually count rows in a report that had thousands of lines.
Every accountant has that moment. Now, this is the part that nobody tells you in accounting class. Your software skills and your Excel skills will come naturally through repetition. You do the same tasks month after month, and they become automatic. The dangerous mistake is spending all your time on software and neglecting the conceptual foundation. Because software changes, accounting principles don't.
All right, we've covered 2 of the 5 pillars: core accounting operations and your software and tools. These are your foundation. You can't build anything else without these 2 solid.
I'd say these are the skills you need just to survive year 1.
Exactly. Survive year 1. And if you're new to the channel and finding this useful, hit subscribe. We put out a new episode every week on accounting English, and each one gives you something you can use at work the following week. No theory for theory's sake.
And tell us in the comments, which accounting software are you using day to day? MISA? FAST? Xero? QuickBooks? Something else entirely? We're genuinely curious. Every market is a little different.
Coming up, Pillar 3, which involves tax. And I'm going to say something about tax that might be counterintuitive. Trying to know everything is actually the wrong approach. We'll explain what to do instead. And we're still coming back to that performance review question. We haven't forgotten. Pillar 3, tax knowledge. And here's the first thing I want to say about tax. The field is enormous. In Vietnam alone, you have VAT, corporate income tax, personal income tax, invoice regulations, quarterly filings, annual declarations, transfer pricing rules for related party transactions, and each one of those has multiple circulars and decrees that update regularly.
I felt so overwhelmed by tax in my first 2 years. I was trying to read every new regulation across every industry, and I was constantly behind.
And that's exactly the wrong approach. The better strategy, the one that actually works, is industry-specific focus. Pick the sector you want to work in: manufacturing, real estate, trading, technology, services, outsourcing. Each one has its own tax patterns, its own specific issues, its own filing rhythm. Go deep in one industry for 2 to 3 years, and you'll know more than someone who went broad for 5.
Like, a manufacturing company's VAT situation is completely different from a real estate developer's. Different rates, different input deductions, different invoice requirements.
Completely different. And the conversations you'll have with the tax authority, the documentation you need to keep, the risks you need to flag, all different. So focus, pick your lane, go deep. That's the strategy.
What about the basics, though? The things everyone needs regardless of industry?
Those you need no matter where you work. Monthly or quarterly VAT returns, corporate income tax quarterly provisioning, personal income tax if you're handling payroll, invoice management. This is especially important in Vietnam because the e-invoice system has strict rules. The mechanics of these filings, you need those in every job. The nuance and the interpretation, that's where you specialize.
And speaking of on-the-job training, let's talk about Pillar 4, which I think is the most underrated skill on this entire list.
What is it?
Self-review, the ability to check your own work. This is actually the mistake I see most often in junior accountants. They treat their first draft as their final output. They prepare something, they submit it, and they trust that it's right. No review step.
That's a bit alarming when you put it like that.
Think about why auditing exists as a profession. It exists because even experienced accountants make mistakes. Even well-run accounting teams have errors. The whole point of an external audit is to provide an independent check. But you can't rely on the auditor to catch your mistakes for you. That's too late and too expensive. You need to catch them yourself first.
What does a basic self-review actually look like for a junior accountant?
At the most basic level, does my trial balance balance? Do the subsidiary ledgers agree to the general ledger? Does my cash figure match the bank statement? Does my closing balance this period equal my opening balance from last month? These are simple checks. The hard part isn't knowing what to check. It's building the discipline to check every time, even when you're tired, even when the deadline is in 30 minutes.
I think this is where the pressure management skill comes in too, because when you're rushing, that's exactly when you skip the review step.
Exactly. And the more senior you become, the more sophisticated your review gets. You stop just checking for arithmetic errors. You start reviewing for logic. Does this number make sense given what I know about the business this month? Revenue went up 20%, but payables went down? That's unusual. Let me look closer. Okay, let's make this real, because I think the best way to show both the review skill and the English skill is through an actual scenario. Can we do the role play now? Let's do it.
Workplace scenario. Setting: video call between Jenny, junior accountant, Ho Chi Minh City, and David, Singapore-based manager. Jenny has just submitted the monthly cash flow statement. Jenny, I've had a look at the cash flow you sent over. Can you walk me through the operating section for me?
Of course. So we prepared it using the indirect method. I started with the net profit for the month. That came in at around 32,000 Singapore dollars. Then I added back depreciation. We have about 4,000 in monthly depreciation on the warehouse equipment, and since that's a non-cash expense, it goes back in.
Good. What about working capital movements?
Accounts receivable went up by about 8,000 this month. We had a large shipment go out in the last week of the month, and the invoice is still outstanding. So we recognize the revenue, but the cash hasn't come in yet. That's an outflow adjustment in the operating section.
And payables?
Payables increased by around 5,000. We received goods from our main supplier, but the payment terms are 30 days, so the cash hasn't left the account yet. That's an inflow adjustment.
I noticed the closing operating cash flow is a little lower than last month. Is there anything you'd like to flag?
Yes, actually. I did want to flag one item. When I was reviewing the reconciliation, I noticed that a deposit from customer A came in on the last day of the month, but it had been entered in the system with a date of the 1st of next month. I've corrected the posting date so it falls in the right period. Without that correction, the operating cash would have looked about $15,000 lower than it actually was.
Good catch. That's exactly the kind of thing to check before you submit. Well done.
Let's break down what Jenny did well there. She didn't just read numbers at David. She explained the logic behind each line, why receivables moved, why payables moved, what it means for cash.
And I chose flag deliberately. If I'd said I found a problem, it could have sounded like something went seriously wrong. But flag is neutral. It just means here's something worth noting, and I fixed it.
There's one more thing I want to point out. Jenny said, I noticed this when I was reviewing. Not when I was checking. Not when I submitted it. She said reviewing. That one word tells David she has a process. She didn't prepare and send. She prepared, reviewed, and then sent. That distinction matters more than people realize.
Pillar 5. And this is the one that gets the least attention in accounting training programs, but it probably has the biggest impact on how fast your career actually moves.
Soft skills, right?
Soft skills. But I want to be specific, because soft skills is too vague to be useful. In accounting, the specific soft skills that matter are how you communicate with the tax authority, how you handle your banking relationships, how you explain financial information to non-finance people inside your company, your CFO, your operations manager, your HR director, and how you manage your time when 3 deadlines hit in the same week.
The tax authority communication is a really specific skill. I had to learn it completely through experience. They ask questions in particular ways, and if you don't understand what they're actually asking, your answer can make the situation worse.
Exactly. And it's not about being the most confident person in the room. It's about being prepared, knowing what documents they're likely to request, being able to explain your calculation methodology in simple, clear language. And this one is underrated, knowing when to say, "I'll check and come back to you," instead of guessing on the spot.
Time management is the one I still work on. Month-end close, annual audit prep, tax deadline, all overlapping in the same 2 weeks.
And here's the thing about this in the Singapore context specifically. For the fastest growing segment of the profession right now, Singapore-owned companies, Australian outsourcing work, multinational subsidiaries, English is the working language every day, not occasionally. Every review call, every email to the manager, every time you walk someone through a cash flow statement on a video call.
So the soft skills aren't just about communicating well. They're about communicating clearly and professionally in English, in real time, under pressure.
Which brings us back to the question I promised you at the beginning of this episode.
I've been waiting for this.
The question every manager asks in a performance review. I've heard it phrased 100 different ways, but it always comes down to the same thing. The question is, tell me about a time you caught your own mistake.
Oh, that's the question.
That's the question. Because your manager isn't looking for someone who's perfect. What they're looking for is someone who reviews their own work. Someone who has enough professional maturity to know that their first draft might have an error, and who has a real process, not a vague intention, for finding it before anyone else does.
And what does a good answer to that question sound like in English?
It sounds like this. I was preparing the monthly payroll provision. Before I submitted it, I ran my usual reconciliation. I found that the social insurance contribution had been calculated on the gross salary figure instead of the insurable salary cap, which gave us a higher liability than it should have been. I corrected it, documented the change, and the filing went out on time. That's the answer. Not, I always check my work. Specific. Name the error, explain what you did about it, state the outcome.
This is not about being perfect. It's not about never making mistakes. It's not even about being the most technically skilled person on the team. It's about being the person who catches their own mistakes before anyone else does.
That reputation, once you have it, is how you go from junior accountant to general accountant in 3 years instead of 5.
All right, let's wrap this up. 3 things to take away from today. First, the roadmap. 5 pillars. 1. Core accounting operations, including building a cash flow statement using the indirect method and understanding how costs are calculated and allocated. 2. Accounting software and Excel fundamentals. The logic matters more than the tool, and 3 Excel functions are enough for your first 3 years. 3. Industry-specific tax knowledge. Pick your sector, go deep, and build the broad filing mechanics alongside it. 4. Self-review habits. Reconcile, cross-check, and document every time. 5. Soft skills for accounting specifically.
communication with tax authorities, banks, and internal stakeholders, and the time management to hold all of it together under deadline pressure. And the sequencing matters. Year 1, operations and software. Year 2, go deep on tax for your specific industry. Year 3, sharpen your review skills and build your communication confidence. That's the path to general accountant in 3 years, not 5. Second, one phrase to take away from today's episode. I noticed this when I was reviewing. Not, I found a problem. Not, there's an error. I noticed this when I was reviewing. That sentence tells your manager 3 things at once. You prepared something, you reviewed it, and you caught something worth flagging. That's professional. That's someone who's already thinking like a general accountant.
And third, the confidence piece. You can now answer that performance review question. When your manager asks, "Tell me about a time you caught your own mistake," pick a real example, be specific, name what you found, explain what you did, state the outcome. That answer, delivered clearly, in English, signals something important. It says, I don't just do the work, I take ownership of it. Before we go, we want to hear from you. What was the skill you wish someone had told you about in your first year of accounting? Not the university curriculum, the real-world stuff that nobody teaches you until you're already in the job. Drop it in the comments. We read everything. That's going to be a good comment section. It always is. Thanks for listening, everyone. We'll see you next week on The Balance Sheet Guy.
Can you walk me through the standard way a manager asks for a step-by-step explanation? Your job is to take them through calmly and clearly. I'd like to flag one item. Professional, neutral way to bring something to your manager's attention. Not alarming, just informative. I noticed this when I was reviewing. 3 words that signal you have a real review process, not just a submission habit.